Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005 and still alive in 2026. So today, Tuesday, May the 12th, this candle right here on a chart of the S&P 500 daily chart, um, market was down a little bit in the morning. Looked like it was going to continue to go down, but then boom, bought back up. Because today the big news is inflation and market strength. Yes, we had the inflation print that was hotter than usual, and yet we have market strength. Okay, we'll get to all of this and the implications of the inflation move today, along with some things that I also did later on. But first, we always talk about the technical picture, guys. We are still bullish in the technical picture. No need to go more in depth, okay? And it's very, very parabolic. We thought maybe today we get some kind of sell-off. Nope, still there. And the scary part is that it could go higher because we're still not at extremes, okay? We always pair our technical analysis with the sentiment. 66, 67, it's staying around here. It's burning off overbought conditions, I guess. And yet this put-call ratio is still at extreme greed. A lot of calls are still being bought. Maybe we need to hover around here for a couple of days before a down move. I don't know, because I thought today would be the down move and we didn't get it. So sentiment is still not, it's up there, but it's still not very, very elevated at extreme levels despite this parabolic move. And market is technically bullish. So you want to stay bullish, however you want to look. I'm looking for a pullback sometime so I could buy into it. Okay. And let's get into our main event. Okay. Inflation and market strength. Okay. We had the inflation print today. We came out, this is the inflation, the CPI came in at 0.6%. However, they're expecting 0.6%, so no craze there, no crazy move there. And it's down from last month's 0.9%, so things might be getting better. However, that was just a headline, okay? If you look at the core, which strips away, it was expected because of energy, the war. Everybody thought oil is up, so yes, headline will be up. But what about the core CPI? Did that do better than expected? Well, we'll see. No. The answer is short answer, no. It's at 0.4%. So the core went up too. Okay, probably services inflation. So services went up. So that is problematic. That has got people freaked out. They were expecting 0.3 and they got 0.4. Okay, because look, for the past couple of months as the war was going on, we could say that, yeah, we had 0.9% monthly inflation, but look, the core was at 0.2. It wasn't really affecting, it was just energy. It wasn't affecting anything else. But now everything else is being affected. It's not just energy. So it's broad-based, especially in services. So it's bleeding into X energy, It's bleeding into the non-energy sector as well, which is very, very dangerous, okay? So, it's even on CNBC, they talked about it's not just Iran and oil rising, it's inflation. Okay, prices also are accelerating in other areas, mainly services. So you have this, not just the core inflation, not just the United States headline CPI number going up, but it's the US core CPI going up too, which is very, very problematic. And the reason for that is because the Fed might hike rates. Okay, so here we have a picture of the Fed Watch tool, which measures the percentage chance of a rate hike or not. For next month, it's basically 3.5% no hike. But if you look at December, the end of the year, there's only a 61% chance of no hike and a 30% chance of one hike and an outside chance of two hikes. So this was down to like 10% after that. After these inflationary periods, it's up to 30% chance of a hike. Still not problematic. If it gets to become the majority, then people might actually start to think that we're going into a rate hiking cycle, and that will hurt markets. That's why I said there's inflation in the market, but the market is still showing strength. If inflation is really going to become a problem, you would see this ratio, the hike, go much higher, okay, almost above the no hike. It'll almost be a certainty that the Fed is going to increase rates. But now they're not sure because they still know it's the war, and if the war ends soon, inflation will abate. But if it stays on for 6 months, whatever, inflation will be a problem. So right now the market is still strong because it thinks that the war will not last that long. However, are we getting the same feeling everywhere else? I don't know. When we look at inflation, we always look at oil. And today, U.S. oil was up. Okay, we're still hovering around that $100 mark. It's 102 now a barrel. However, it's still problematic. It's still not going down. The chart is still bullish, higher highs and higher lows. Nothing has been destroyed yet. If we go below this level, or this level would be like $85 a barrel, or maybe the spike low of 80. If we drop below that, then we have a double top type of situation, or even a head and shoulders, and that would be bearish, and that would be good for the market. However, we don't have that yet. And we have oil going up, okay? But do we have other commodities going up? Before, no. This whole period, no, we didn't have other commodities going up. But for the past 2 days, I was mentioning that we have other commodities going up as well, especially silver. Look at silver ripping today. It was down a bit and then finished positive. A red to green day on silver. After being up 7% the day before, it's slightly up today. So I suspect that tomorrow we can very well have one of these like monster moves to test the, I don't know, maybe around here, 95. If it goes up another $7, we're back at this high of 94-ish, 95, which is 94 level, which is big. Okay, so you have other commodities, especially silver going up, which is a critical metal. We also have copper. Okay, people don't think that, don't look at copper, but look at that. These are new highs. We mentioned yesterday that it broke into new highs, and today it's continuing. Despite the fact that the market was weak the whole day, this was bid the whole day. So you have copper and oil, the two biggest harbingers of commodity inflation, going up and staying up. Okay, not good. It's starting to creep into the regular system, and not just energy. We saw again, it's starting to creep into core inflation. Okay, all of this is it's all the same thing. This chart, these indicators are showing you the same thing. Commodities are starting to go up in price. Okay, we were hoping that U.S. oil, if you do U.S. oil divided by gold, because for the longest time we had, for the longest time, U.S. oil priced in gold was going down. Okay, it's a relationship that was always negative. Okay, but now, it was oil was going down as gold was going up. Okay, you were having the opposite effect because the world was awash in oil, but now it's starting to become oil is starting to outperform gold. Okay, it's almost the same chart as U.S. oil. Okay, this has been the weird story of this war, is that gold is not bid with oil. They usually would go up together. It would be flat here, or maybe even down. Okay, but not this time. Okay, this time oil is going up and gold is going down. I thought that gold would start behaving like other commodities, but no, not yet. Okay, gold is still subservient to oil right now. People are selling gold and buying oil with the proceeds, going long oil, short gold. And they used to do that with other commodities. Okay, you have U.S. oil, silver. Okay, same. But this time, look, it's down now. Recently, it's been going down. Okay, this move here is telling you for the past month, it's telling you that oil was outperforming silver. But normally it goes down just like gold. Okay, you would see oil go down vis-a-vis silver because silver is like a critical metal. It's usually strong. Okay, during the war, it's telling you that oil was outperforming every commodity. For some reason, commodities and gold were not bid during this geopolitical conflict, which is rare. But look at this. It's been going down recently, past 2-3 days. Going down means that silver is outperforming oil. Okay, you will probably see the same thing with U.S. oil over copper. Would be the same story. Okay. Yeah, you see, it's been going down this past week, past couple of days. Okay, bucking the trend. Whereas you see with gold, you would see a tick up. Okay, remember U.S. oil divided by gold. You would see it tick up the last couple of days, not down. I thought yesterday would be when it would start ticking down. No, we still have short gold, long oil going on, but not for other commodities. We don't have long oil, short silver, or short copper anymore. So this is telling you that the copper market, this rip is real. Inflation, commodity type inflation is creeping into the system. Okay, and silver is telling you something. Silver, there's something weird going on here. It shouldn't be this strong, but yes, I mean there still is a critical shortage of this critical metal. Okay, so it's telling you there's a harbinger of doom. I hate to sound like that, so hyperbolic, but it's telling you something. Silver and copper are telling you something. Okay, so that's what I mean by the inflation thing. Okay, we have a lot of inflation going on, yet the market is still strong because we're getting nascent beginning signs of commodity inflation also creeping in, not just oil inflation. Okay, as we mentioned, we have the Fed rate hikes kicking in at 30%, whereas before there was like, 4 or 5%. So people are starting to notice that inflation now is creeping into other sectors, okay, including the precious metals and the commodities sector. Okay, the precious metals more like silver, and maybe platinum too is going up, but gold not yet. Okay, and maybe if gold starts going up with oil, that would probably be the final straw. Like it's really going to be solidified at that point. So we do have market strength yet because it's very, very solid. Okay, more so, but we don't know. We have to keep an eye on inflation, because if inflation gets hotter and hotter, this market strength will start coming down again. All right. So before we go, I'd like to mention that the reason the market went down is the semiconductors were down. SMH, see, it's actually down today, about 2.6%. The entire index. We had the bane of my existence, Intel, going down 7%, a lot. However, we mentioned that the reason that the SPY is going up is mainly due to semiconductors. However, look at SPY, barely down, with semiconductors still down. It's telling you that there's more to it. SPY is strong. SPY is starting to get very, very strong. Okay, this is why I'm hoping we get a pullback so I can buy it. It's going to be a very buyable pullback. Okay, and I'm waiting for that. Although, SMH, will that go down and SPY going up? Will it diverge where other sectors in SPY kick in and pick up the slack as the semi sort of cool down? I don't know. That's yet to be seen. Okay, we'll put that on our radar screen when it happens. But right now, the inflation, the story is an inflation story, brought about by commodities prices starting to creep up: copper, silver, and I'm looking at gold. Right. That's it, guys. Let's see what happens going forward. It's going to be an interesting week. Later.